Last fortnight has been so much
Morning,
better,
Anish.
right? Not just for the index, but in general, portfolios have got repaired a bit. Mid caps have started to look up once again. Even the beaten down auto names doing well. Your thoughts?
Anuj, what we are seeing is a rebound from an extreme oversold condition, particularly in the small and mid cap space. They've been beaten down whatever beyond what was necessary, beyond what the fundamentals justified. There was extreme pessimism, so we've seen some of that correcting a little. I think that's about it. Nothing more to read in that as yet.
Good morning, Sanjay. Good to have you with us. What are the chances that this may turn out to be a dead cat bounce? Is this reflecting that all the steps taken by the government is turning the economic wheel somewhere? Or is this just short covering, as you say?
Lata, it's too early to really pass a verdict on that, whether it's a dead cat bounce or we've seen the worst of the selling and the worst of pessimism out of the way. But, I don't look at, I really can't gauge the markets on a weekly, fortnightly basis or maybe even a monthly basis. It's very difficult to game, prices and kind of continuously have a gauge of price value beta. I can only say that what we're going through in industry, in Indian business is a period of, a seminal change that the way India does business, the way things have happening in the future and the way the things will happening in the past, the way things will happen in the future. And it's this adjustment that stock prices and the markets are reflecting. So it's a reflection of the Main Street, it's a reflection of the main industries that are going through. Now, obviously, you can't pass a verdict on, that we're seeing a fortnight or a 10-day or price movement. But I can, like I said, when I started my conversation, that we are seeing the prices come off a period of extreme pessimism and extreme negativity. So if I were to wager, I think there will be a good chance that we probably kind of made a base. Now we will see some kind of a time consolidation, a time kind of sideways movement before smart money starts to aggressively pick up stocks based on fundamentals and the prospects ahead. And more importantly, I repeat, like I said, I think a while back on your show with you only, that this is something that we see once in our lifetime that's happening in an economy, in a country, the kind of changes that are happening. But it's unfortunate that we all have to deal with prices on a daily and hourly basis and react to them. But if you will go back and see 20, 30 years later, 15 years later, then we realize this was something like what we saw in the 91-93 period. This period of 2015 to 2019 is actually a bigger period than what even 1991 was in terms of Indian business and markets and everything else.
Sanjay, hi, good morning. So just wanted to scratch that point further because, much of the policy response that has come in from the government, whether it's rate cuts, whether it's injection of liquidity or even recapitalization, has been targeted towards the banks, especially the PSU banks. How are you approaching that space now, financials as a whole? Because we've seen a lot of fund buying into some of these private names like ICICI Bank, the HDFC Twins, etc. Would you advise retail investors to put some more money here?
So the fundamental bedrock or the fundamental, engine of an economy is the financial system. If the financial system is not strong, or the financial system is not kind of geared up to handle a new regime, a new way of doing business, and is not, deep enough and not liquid enough, we will not be able to withstand the shocks that we are going through, or will not be able to really go through this change that we are seeing. So what the government is doing and what steps they've taken right now are more short-term steps, but fundamental changes, the way PSUs lend and the way PSUs are looked at, of course, leaving aside the governance debate, which of course Lata and I can discuss for hours together, leaving aside that debate of how PSU banks would be run, I think there are radical changes that are happening in the banking system. Now, coming to your more specific question of what the investors should look at, I think investors should now start looking at some key public sector banks which will have the potential to go really big, because we must understand that we cannot do without them. But the question is, which are the ones which we can do within our portfolios. So that's the call we need to take. Just for a small example, I'll give you the second largest PSU bank post this consolidation had the market cap of 30,000 crores. HDFC's market cap of 6.5 lakh crores. State Bank of India has a market cap of 2,80,000 crores. The balance sheet size of the second largest bank and HDFC Bank would more or less be the same, or probably this bank would be larger. Now, there is definitely a disconnect, and of course, a lot of people turn around and say NPAs, governance, and everything is kind of pathetic at PSU banks. So why should I be tempted to invest? But obviously, it still can't trade at 1/20th to 1/15th of HDFC Bank. It has to get re-rated. Governance and all those issues will follow. Government realizes that. Everyone realizes that. So I think that's where the opportunity is. You've got to make sure where you want to be now to position yourself, and also your risk-reward framework. Are you looking at something 20-25% return per annum, or are you looking at a 3x, 4x in the next 2 years? So keeping that kind of matrix in mind is where you need to invest in the banking space.
Fair enough. Sanjay, you have been selectively bullish on some of the mid-cap metal names, saying that there's a lot of value in some of them. You think that's still the case? Stocks have gone up a bit over the last fortnight, but you think metal still is good value?
Oh yes, Anuj, I think so. And the reason I think so is because I was just reading yesterday about some Chinese data. New loans, fresh loans added in China in the month of August have been $170 billion. And we both know very clearly that the commodity equation, the entire commodity equation basically is around China, and China being the biggest producer, consumer, and exporter, and everything else put together. So if China is trying to reflate its economy or reflate the sectors, there is no reason why metals will not have a positive bias in the next few months. May not be immediately, but I think the sector will start looking up. Chinese are particularly ruthless when it comes to really using whatever means possible to kind of take ahead the economy. Yes, we can debate ad nauseum whether those things are correct or they work or they don't work, but a lot of people obviously might say that throwing money at the problem is not the solution. But of course, China is cognizant of that. China is taking a lot of other steps. Now, to cut a long story short, I think in this backdrop, metals do have legs. The metal stocks have been beaten down beyond reason. Government in India also are taking steps, and particularly metals have been impacted a lot because of the FTA arrangements, imports coming in, even though there have been CVDs and all other measures on Chinese stuff. Now, government is also taking action there. So therefore, I think some domestic metal stocks do look good now and are worth investing into.
Okay. Well, Sanjay, I agree with you that I violently disagree with the kind of positivity you have on the reforms of the last 6 years. I thought 1991 changed the grammar much more seminally. But we will have that discussion on some other day. Nor do I think that public sector banks are given the rightful place they deserve in terms of making commercial decisions. They can't go to the nearest management college and recruit people. Such is the curbs on them. So I disagree on a lot of governance issues over there. But that's a different debate which we should have at some point. But I wanted to come to how you can help investors in terms of how they should approach certain stocks. I wanted your take on IT. It's actually stood out and been one of the brilliantly defensive and money-making sectors this year.
I think you answered the question. Brilliantly defensive sector. So therefore, now on, do I want to have more defensives in my portfolio, or am I willing to take the aggressive bet that interest rates will collapse? So therefore, I would like to go to cyclical and some other consumption growth story, or the traditional Indian conventional players like cement, infrastructure, etc. So for my kind of investor profile, I would be underweight defensives going ahead. I think my own sense is that markets tend to move ahead of the economy. Markets have understood and built in most of the negatives now. So any more negatives if you're now throwing at the markets, markets are not kind of reacting negatively or are unlikely to react negatively. I'm happy to be wrong, so therefore that's why we have a term called stop losses. But therefore I would be more aggressive on some of the non-defensive plays than pure IT plays or pharma, etc. They would be in your portfolio, but the question of weights is important right now. So I would not want to allocate huge weights there.
Sanjay, anyone and everyone is advising to put fresh money into mid caps and small cap stocks now. But the only fear is that the kind of decimation that these funds have seen. I mean, if you had invested in a mid cap fund, say 2 years ago or even 1 year ago, your portfolio would have halved by now, or even worse in some of the funds. But what's your advice? Is this the time to invest into put fresh allocations to mid cap and small cap funds, or not quite yet?
No, I have no second thoughts, Sonia, on that. That leave it to the fund manager, leave it to the mid cap, small cap fund manager. I think this is the time to allocate, and if you've been doing your SIPs, don't stop, because the biggest mistake all of us make is when we get bearish in the market, we kind of tend to we have a tendency to discontinue our SIP plans. That's something which you should never do. Particularly, you must understand you're not investing money, you are actually accumulating units when you're using the SIP route. So therefore, what you're obviously greedy, you want to accumulate more units. When you get more units for the same amount of money, that's the time when you need to actually increase allocation and not withdraw allocation. So answering your question, this is a good time to give it to a professional fund manager who's managing a mid-cap, small-cap fund, who would obviously be cognizant of which stocks to hold, not to hold. He would be shuffling, he would be working out. So I don't see any reason why you should not be allocating to a mid-cap, small-cap fund. You should in fact increase your allocation now.